Welcome back, everyone. Today, we are diving deep, really deep, into a piece of core DeFi infrastructure that honestly could shake things up quite a bit. We're talking about the multi-billion-dollar world of derivatives. Yeah, the project is called Percolator. It's a new decentralized exchange, a DX, specifically for perpetual futures. Now, we've got the design specs from GitHub, but here's the real kicker, the thing that made us sit up straight. It's reportedly being built by none other than a core Layer 1 founder, Yakovenko himself, on Solana.
That is, yeah, that's a huge signal. You absolutely have to pay attention when that happens. Perpetual contracts, or perps as everyone calls them, are already one of the fastest growing areas in DeFi. Tons of capital involved.
Yeah.
So when you see someone who architects the foundational blockchain layer, like Yakovenko, suddenly switch focus to building an application on top of it, that's not random, it's strategic. A successful native Solana perps DX could genuinely shift massive amounts of trading volume, liquidity, even risk profiles across the entire crypto space. And for you listening, look, understanding these infrastructure plays, these deep level shifts, that's your shortcut. It helps you see where value, protocol value, maybe even token value might pool up next.
Okay, let's unpack that right away. A Layer 1 founder, their usual job is, block times, consensus, keeping the chain running smoothly. So them building a high-performance app like this, it almost suggests they feel the Layer 1 problem, the speed and throughput part, is, well, maybe not solved, but managed. The bottleneck's moved up the stack, hasn't it?
That's a great way to put it. The battleground shifts. If the L1 is fast enough, the next challenge is building applications that can actually use that speed without breaking.
Right. So let's start with the why. Why perps? I mean, there are other dEXs, other derivatives platforms. Why should we care so much about this specific market segment?
Because perps are where the serious capital tends to play first, especially when moving from CeFi to DeFi. It's a massive market, billions, historically dominated by the big centralized exchanges, the CEXs. Any platform, any piece of infrastructure that can offer that CEX level speed, that reliability, but do it fully on-chain, right? It changes the game. It fundamentally redirects where that money flows. Think about institutional interests. When they dip their toes into DeFi, it's often spot markets and derivatives. So having a really robust on-chain perp system, like Percolator aims to be, it unlocks so much more. Composability.
Composability, meaning you can build other DeFi things on top of it more easily.
Exactly. Imagine native cross-margin across different assets, automated liquidation bots integrated directly, complex yield strategies using perps as a base layer, all running transparently on the Solana ledger.
So it's not just about giving traders leverage, it's about building out that whole financial toolkit that institutions expect from CEXs, but making it decentralized. It's a direct challenge, isn't it?
It absolutely is. It's aiming for the heart of the CEX value proposition. If DeFi can capture a significant slice of that high-frequency derivatives action, it takes fee revenue, it takes liquidity that used to live off-chain, and that, in turn, strengthens the underlying chain, like Solana in this case. More activity, more fees burned potentially, more demand for the native token, SOL. It boosts its competitive position.
It really underscores that infrastructure is still the main event. Architecture, scalability, these things matter hugely, especially when you have an L1 founder getting hands-on. Okay, that brings us to the tech, the GitHub blueprint. This is where it gets interesting, right? What is Percolator under the hood?
Right. The docs call it a sharded perpetual exchange protocol for Solana. The whole design philosophy seems to be, how do we max out Solana's L1 speed? And the answer isn't one big monolithic program. It's smaller, specialized pieces working together. They've broken it down into two main on-chain programs, something called the router and something called the slab.
Router and slab. Okay, I need an analogy here. If Percolator is like, I don't know, a giant shipping port,
Right.
What do these things do?
Okay, good analogy. The router. Think of that as the port authority and the main coordination center. It doesn't handle individual ships or trades in this case. It manages the global stuff. So user collateral, calculating overall portfolio margin, which is super important for sophisticated traders managing risk across multiple positions. And crucially, it routes the orders. It directs the traffic to the right place. They call it cross-slab routing.
Okay, so router is the coordinator. What about the slab?
The slab is the actual dock, the specific berth where a ship unloads. It's the self-contained engine for matching orders and settling trades for one specific market, say ETH perps. Because it's self-contained, you can have many slabs running in parallel. Think of them like separate dedicated trading pits or maybe separate processing lines in a factory. Each one handles its own specific task, its own market.
Right, parallel processing. That's the classic way to scale, handle more volume. But you mentioned isolation earlier. The docs highlight that. Why is keeping these slabs separate so critical for something like a perps exchange?
Systemic risk. That's the big one. Derivatives trading, especially with high leverage, is inherently volatile. You will get flash crashes, you will get cascading liquidations eventually. It's just part of the market.
Yeah.
Now, if you have one giant traditional exchange program, a problem in one market, like a sudden massive liquidation in, say, the dOGE perp market, could potentially freeze up the entire system. Everything grinds to a halt. With this sharded slab architecture, if that huge liquidation hits the dOGE perp slab, that specific slab might get overwhelmed, but it's contained. It's quarantined, essentially. The SOL perp slab, the BTC perp slab, they just keep running, keep matching orders, keep settling. That kind of resilience, that predictable uptime even during chaos, that's what serious professional traders absolutely demand.
Okay, that makes a ton of sense for stability, but isolation usually means coordination challenges, right? How do they stop weird price differences popping up between the slabs if they're technically separate matching engines? How does my margin on the router know what's happening instantly on slab A versus slab B?
Yeah, that's the million-dollar question, isn't it? Or maybe billion-dollar, given the market. The router acts as that central source of truth for margin and collateral balances. And the whole system is designed to leverage Solana's very fast L1 block times to minimize any delay, any latency between what happens on a slab and what the router knows. The goal is near instant sync, but you're right to flag it. That execution risk, does the code actually work perfectly under extreme stress? Can it handle that coordination flawlessly? That's probably one of the biggest technical hurdles they face before launch.
Understood. And just to reiterate for everyone listening, the source material says this is implementation ready. This isn't just a white paper idea. It sounds like it's potentially close to launch. So let's shift gears a bit. The competitive landscape. If this thing launches, led by Yakovenko, well-funded presumably, what does that mean for the current players? Who are they up against, and what's Percolator's potential edge?
It definitely puts the existing Perps DEXs on notice. You've got platforms like Hyperliquid, which has been doing really impressive volume. Aster on the BNB chain is another significant one. They've carved out niches. The key difference, or the proposed difference anyway, seems to be how on-chain the execution really is. Many current high-volume platforms use some kind of hybrid approach, maybe off-chain order books, maybe centralized components for matching or risk checks, with final settlement happening on-chain. Percolator seems to be going for the full Monty, high-speed, fully on-chain execution, settlement, everything, relying purely on Solana's L1 speed and that sharded architecture. If they nail it, they potentially remove those centralized dependencies while keeping the performance high.
So really pushing the envelope on full decentralization plus speed. Okay, let's break down the impact. For traders, especially those already active in the Solana ecosystem, what's the takeaway? What should they be watching?
Well, if Percolator delivers on its promise, it could mean much deeper liquidity, tighter bid-ask spreads, better pricing, particularly for tokens native to the Solana ecosystem. That's the dream. For a serious trader, the move is definitely to watch this project like a hawk. Look for potential early mover advantages when it launches. But, and this is crucial, always be aware of the risks with brand new tech. Smart contract bugs are always a possibility, especially with complex systems. Proceed cautiously.
Right, the degen instinct needs to be balanced with risk management. And for investors, people holding SOL or just generally bullish on the Solana ecosystem's future.
This is about fundamental value accrual for the chain itself. Successful, high-volume applications that generate real fee revenue. That drives long-term, sustainable value for the underlying Layer 1 network and its token. It's also a direct shot across the bow at competing L1s and L2s. It aims to cement Solana's reputation as the place for high-frequency, complex financial applications that need raw speed and low latency. But we have to be realistic. Building and launching a Perps DEX is incredibly hard. The source material implicitly points out several major risks we should probably touch on.
Yeah, let's cover those. What are the big hurdles the Percolator team needs to clear?
Okay, 4 main ones jump out. First, as we mentioned, execution risk. Can the tech actually handle the real-world chaos? Billions of dollars flowing through, potential exploits, coordination failures between those slabs under duress. It needs to be rock solid. Second, regulatory risk. Derivatives are heavily regulated globally. Any shifts in how regulators view on-chain leverage, margin, or even just DXs in general could throw a massive wrench in the works. Third, competitive risk. They might have a great design, but others are moving fast too. Someone else could launch something equally good, or maybe even simpler and faster, beating them to market or capturing initial mindshare. And finally, liquidity risk. This is huge for perps. These markets need deep, deep order books to function properly and attract serious traders. Bootstrapping that initial liquidity across potentially many sharded markets, many slabs simultaneously. That's a monumental task. It's not easy at all.
That paints a very clear picture, huge potential upside, but significant challenges too. Okay, let's start to wrap this up. If there's one big takeaway, one major shift listeners should really grasp from this percolator development, what is it?
I think the core insight, the signal here, is seeing where a top L1 architect is focusing their energy now. It's shifted to the application layer, specifically to solving complex, high-frequency application problems like derivatives trading. It suggests the next big wave of value creation in crypto might come less from just new layer ones or simple token launches, and more from these fundamental protocols built on top, the ones that enable sophisticated activity at scale.
Yeah.
And understanding the architecture like sharded matching, like global margining, that gives you, the listener, a real edge in figuring out where that future value might actually get built and captured.
So for listeners who want to track this actively, maybe they're traders, maybe investors, what are the key signals they should monitor based on what we know from the source? What are the dashboards they need to keep an eye on?
Okay, 3 things based on the material. 1, keep a very close eye on the Percolator GitHub repository. Look for code commits, developer chatter, milestones being hit. Is development active and progressing? 2, as soon as it launches, assuming it does, you need to obsess over the on-chain metrics. Trading volume is obvious, but also open interest, OI, the amount of collateral locked in the system, TVL, and critically, how many slabs are actively running and handling volume. That shows real adoption and scaling. And 3, compare the flows. Watch the trading volume on Percolator versus its key competitors, Hyperliquid, Aster, others that emerge. See where the liquidity and volume are actually moving in real time. That tells you who's winning the market share battle.
That's super practical advice. This project really does feel like it could represent a new performance benchmark for DeFi if they pull it off.
It really does. And it leads to that bigger, maybe more philosophical question we should all be thinking about. If we can successfully build these high performance, potentially even compliant derivative systems fully on chain, will that truly accelerate institutional capital finally flowing into DeFi in a meaningful way? Or will the ever-present regulatory concerns and the sheer technical complexity of managing risk at this scale ultimately put the brakes on that movement? That's the multi-trillion-dollar question, isn't it?
It absolutely is, and it's a question we'll definitely keep tracking here. Now, speaking of tracking valuable insights, for those of you who find these deep dives into core crypto infrastructure genuinely useful, well, we rely heavily on your support. Seriously, if you're getting value from this analysis of projects like Percolator, please take just a second to hit like, subscribe to the channel, maybe leave a comment with your thoughts, and ring that notification bell. It honestly makes a huge difference. It helps the channel grow, helps more people discover this content through the algorithm, and it directly enables us to keep putting in the work to bring you these detailed breakdowns of the biggest stories and infrastructure plays in crypto. We appreciate it. Thanks for tuning in.